Senate Banking Committee adopts financial regulation bill in party line vote. The Senate Banking Committee adopted a financial regulations bill along a party line vote on Thursday, clearing the way for months of partisan negotiations that will determine the legislation's fate. The Republican-backed measure represented the biggest swing at altering rules for the financial sector since the 2010 Dodd-Frank law. The bill would ease some rules affecting small banks, increasing congressional scrutiny of the Federal Reserve, give regional banks a shot at cutting regulatory costs, and give insurance companies and asset managers the chance to revamp their business before being designated systemically important. The bill received no Democratic support from the committee, with all 10 Democrats opposing the legislation. Still, members of both parties said they wanted to continue to negotiate. Senator Richard Shelby, R. of Alabama, chairman of the banking panel, is expected in coming months to try to win Democratic support by altering the legislation. Some Democratic votes will need for the bill to pass the Senate. Quote, "I do not in any way see this as the end of the road," Mr. Shelby said. "In fact, I believe it presents another opportunity to explore areas of agreement before this bill gets to the Senate floor." Senator Sherrod Brown, D. Ohio, the top Democrat on the committee, said his party would support a narrow bill targeting small banks and credit unions, but called the current Republican bill a one-sided wish list. The panel voted down an amendment from Mr. Brown that would have narrowed the bill's focus. Quote, our bill provides meaningful relief to small institutions around which there is consensus," said Mr. Brown. Though he added, "Like the chairman, I hope this is the beginning of a conversation." As talks continued, Democrats' aides said Democrats will likely push Mr. Shelby to remove sections of the bill affecting the Fed and the process of designating large non-bank financial firms for tougher federal oversight. One area where Democratic aides said Democrats were open to negotiation, introducing more flexibility in the way U.S. regulators treat banks with assets of greater than $50 billion, but less than Wall Street firms with trillion-dollar balance sheets. "I do agree that some banks above $50 billion should not be regulated like Wall Street megabanks," said Mr. Brown on Thursday. Reaching a consensus could be a high hurdle. Some Democrats expressed frustration Thursday that Republicans didn't share a draft of the bill with them until less than 2 weeks before Thursday's vote. Senator Mark Warner, Democrat Virginia, decried that he called hide-the-ball tactics and said Democrats received different versions of a Republican discussion draft. A move, one Democrat said, could have been an attempt to trace leaks. "I have been upset by this process more than anything I have been involved in the U.S. Senate," Mr. Warner said. Mr. Shelby said his staff has been working to find areas of compromise and spent months trying to negotiate with Mr. Brown on finding a bipartisan bill that wouldn't undermine the core overhaul that Congress adopted after the 2008 financial crisis, including restrictions on the very biggest financial firms. Privately, Republicans' aides have expressed frustration that Democrats haven't been willing to agree to a bill that does more than make changes to rules for the smallest banks. The panel voted to add 2 provisions to the bill Thursday. One would exempt banks with between $10 billion and $50 billion in assets from exams by the Consumer Financial Protection Bureau, though those banks could still face enforcement action for cheating borrowers. Another would prevent federal regulators from joining a Justice Department program aimed at cracking down on banks that deal with illicit businesses. Senator Joe Donnelly, D. of Indiana, in a rare bipartisan moment, was the only Democrat to vote in favor of both amendments. Analysts say the odds favor the Senate passing a regulatory relief bill later this year, nothing that Mr. Shelby has a history of securing deals. In March 2009, he was the top GOP member of the banking panel, which at the time was led by a Democrat Senator Christopher Dodd. That committee voted along partisan lines to advance a bill related to credit cards. 2 months later, Mr. Shelby and Mr. Dodd reached a deal on a new version of the legislation. It passed the Senate 90-5. Thank you for watching the Shikama Life Show.